Hi, everyone. Welcome. It's Brad Gilbert. Happy New Year. I hope you all had a great time and refreshed yourself for 2018. I think it's going to be a great trading year. Now, I'm here to present part 5 of the series, How Do Bankers Trade Forex? Now, this is where I'm going to bring all those earlier components together. And this is where it'll start to make a lot of sense. I'm going to start incorporating the capital management side of things with the fundamentals, the technicals, and then really focusing on those low risk, high probability trading opportunities. And they're the ones that you really want to get aggressive with. You've got your capital, you've got it sitting there, you've been very patient, you see a very good opportunity, whether it's on the back of a central bank announcement or a key fundamental release, you've got your key entries, and then away you go. And that's how you make a lot of money very quickly. It's not about sort of trading all day and thinking, I'll make $500 every day. That's all well and good. But what about if I told you you'd make 20 grand every time? It was a very good opportunity. And this is what I want to do with this. So what I'll do is I'm going to incorporate our main trading tool. And this is what the bankers are using. Okay, they're using Reuters or Bloomberg for that matter. Now, Bloomberg is so much more expensive that the banks themselves don't even give it to everyone. Okay, what you'll find is everyone will generally use Reuters for their analysis, technical and fundamental. Okay, what that means is they're looking at their charts and they're also looking at all the news and all the real-time economic data releases through this one tool. It's your connection to the market. Okay, and I'll also give you a run through of the website and where we incorporate the various aspects of the market to make trading simpler for you through our market insight, through our daily analysis, the next best trade, and a few other features. All right, so let me get started. I'll just get Reuters Zenith up, and then I'll start to take you through the platform straight away. Okay, so here we have Reuters. Well, it's actually called Reuters Icon, but there's a couple of features that Reuters took out of this, and they call it Zenith. This is more like the retail product. Now, it's a professional platform, and I've got professional links. It is exactly the same as what the banks have. What you probably don't have is Reuters Messenger, where you're talking, where guys from various banks talk to each other, and these sorts of things, but it has every other aspect. Now, let's just put this together, right? Now, what do you do at the start of your day? This comes back to almost part 1 of the series. How do the bankers prepare, right? And this is what they do is they incorporate a systematic approach to their analysis. Now, each day they are looking at the charts very closely. These technical levels, as you would have learned through the technical analysis webinar, it's a matter of systematically going through, and it's almost like join the dots. Okay, now if you can find the key technical levels, that's where traders know momentum will change very quickly. So they focus on the major currency pairs. Okay, now these are the major currency pairs because they are the easiest to trade. The majority of liquidity and volume goes through these pairs, and that's why they're easier and more systematic on the technical aspects. Okay, so there's a few things to it, but one key thing. Now I've got the majors here, right? I've got the Aussie, Kiwi, the Yen, Euro, Sterling, and Dollar CAD. The little Swissy, probably ever since 2015 when the Swiss National Bank pulled the floor from under Euro Swiss, it's always had a little bit of a raw nerve with me. So it gets its own little spot over here on its own page. But funnily enough, I have a page here. This is what you can do with a really good news service like Reuters, is you actually set up templates to make trading easier for you. And this is what we used to do at the banks, right? I don't want to have to spend time trying to work out research and find out what's going on with the Aussie. I will have a page dedicated, for instance, okay, to the Aussie dollar that will, let me just refresh those pages, that will tell me everything I need to know from the real-time economic data releases to the news, which is just being refreshed. I've got the equity markets here for America, Asia, Europe, and also the key commodities. And I also have, I've got the news up there as well. Okay, that's breaking news, everything to do with the major news as well as the Aussie dollar. I've got the currency pair here and the major crosses. Okay, Aussie Yen, Aussie Kiwi, Euro Aussie, Sterling Aussie. I can make decisions if anything comes out. But let me just come back to the start of the day. Each day itself, and this is where we really incorporate on our site, you'll start to see some of these components. So initially, if you are trading and you don't want to spend $99 a month, that's all this Reuters product is, then what you can do, you will find that we do a lot of these analysis for you. Now, on the site, right, the daily market insight, The daily market insight, the key part to this is, and you'll find this on the MyFX Trading Hub, right, on the main site. It's to give you an overview. What you need to do is, as part of your preparation, it's very important you understand what happened the previous day with the currencies. Why did euro go up? Okay, why? If I come back to the major charts here, why did euro go a little bit higher? What's going on with the US dollar? Okay, so I've got the US dollar index here. I can see on the snapshot what the US dollar is doing against the basket of currencies. Now, I come back to the major currency pairs. Aussie and Kiwi have traded sideways. Dollar yen a little bit higher. Euro a little bit higher. Sterling chopping away in a big range. And a little bit of volatile activity on dollar CAD. Now, I need to know what's going on to connect the dots. Right? You need to know where the focus is coming from. What you will do probably first and foremost is you'll have a look at the previous economic numbers that came out from the previous session. And you can usually see, right, this is a little bit of a different picture. So the housing starts, for instance, 1.297 million, okay, versus the forecast 1.25. So slightly better than expected. So that's where you should see a slight rally in the dollar. And it has rallied against dollar yen. But funnily enough, euro has rallied as well. So there's a few geopolitical events happening here. This is one area that what you can do is come into the actual news itself, and this is what I was sort of talking about, probably going back to part one of the series, working out what news is important, what's not. All you want to know is, why did the currencies move up and down? Okay, and here you go. Right, is that they're usually just telling you what happened. There's no sort of bias in it. Dollar firm on tax cut hopes, euro gains on spike in bond yields. Okay, so then you can click on that, go through and find out the German bond yields help underpin the euro. Okay, great. Australian, New Zealand dollars hit 1 week lows on the euro as German yields jump. Yeah, that's just like propaganda. I mean, who cares? Basically, I'm just looking for the key numbers. Sterling hits 2 week low as traders focus on Brexit talks, right? Once the news is out, it's old news, right? This one here, Sterling hits 2 week low. That was out 10 hours ago. What's happened to Sterling since then? It's rallied to the top of the range. So just be careful what you're looking at. You just want an answer. Why did this particular pair go up or down? And it's very important you know why, because if that actual event is reversed, you know how to trade it straight away. So one of the first things I would do is when I come back to the screens each morning. Now, let me just tell you about technical analysis. The best time to do your analysis is at the start of your day. Now, think of the traders. Like, these guys are human just like you. They go to work. They haven't been to work. Most of them don't have a lot of the systems at home, right? So when they get to work, they haven't been in front of the screens for at least 10 or 12 hours, right? So what they do is they haven't seen the currencies. It's very important. They go in and see what's happened. They'll look at the charts and go, right, okay, yeah, Aussie, Kiwi hasn't done much. Euro's higher. Sterling's been whipping about. And then look across the board. So they're looking to see what's going on. And what they want to do is they want to find out if there's been a change of the current sentiment, right? And what we're talking about there is, this is when you come back into looking at the overall big picture of the majors. And what we generally do is, with our analysis, okay, once again, looking at the key component of our daily analysis, we want to give you a big picture, because if you start to look too finitely at the currencies themselves, you can start to see things like price action that, I think it's going up today. Okay, so let me just go in and give you a bit of a quick look at the euro. This, as I said, this comes directly, my analysis and my charts come from Reuters. Okay, so I'm range bound weighting outcome of the US tax bill. Fundamentally, okay, yesterday it was sideways. And technically, the euro is trading sideways. And I've got the charts here, exactly like I do at the top here. Let me just come back to that. So I've got the hourly charts, the daily charts, the weekly charts, and the monthly. This gives me 4 views of what is actually going on in euro. And it's a good way to take away the noise of the short-term price action, as well as see the overall trend. Now, the overall trend for euro is basically sideways. So when I'm looking at the short-term stuff, if the trend was up and it was breaking through this level on the top side, I'd probably pay more attention. But the fact that it is trading sideways in a bigger trend, I'm more inclined to start to think about potential strategies to use. And first and foremost would be like a range-bound strategy. It is actually trading quite nicely within this tight range. I come back, check the news on Euro, see what's going on. And this should give you a bit of backbone to your knowledge around what is actually happening in the Euro itself. You can get a bit of a positive picture there. And then you're building a view of what is actually going to happen in Euro. So you've got your entry levels. So from here, you should have start to get a bit of an understanding of what happened in the previous session. Now, once again, if I come back and actually have a look at the, so I've got the daily analysis. I can see where my entry levels, see if there's any break of the trend, short term or long term. Okay, look at the economic data releases, what is due for release. And that's the next most important thing, because the technicals tell us where the entry levels are. It's the economic data releases, right, that will tell us what's going to happen in the future. And this is where momentum shifts. So traders look at their entry levels, they look at their charts, they get themselves really tuned in to the specific entry levels and those key levels where the currencies may change momentum very quickly. Then they start to look very closely at the high impacting data releases. These are the ones that, with like the difference between like this one here, it's got 3 bars, existing home sales, right? It's the second part of a 3-part series in the home sales data for the US. Now, if it's a high impacting data release, we only need a small amount of variance to get the thing moving, get the US dollar moving, right? If it's a low tier data release, well, then we need bigger variance to get the same level of movement. Do you understand? It's like all these numbers can impact, whether it's high impacting or low impacting. It's the level of variance in the numbers where that volatility will come from. So the higher the importance of the data, the smaller amount of variance to get it moving. And then you can sort of work out, this is how we work out our trading schedule through the week, because we're looking for these big ones where momentum may shift or change very quickly. And now, say for instance, the US existing home sales, we come back and look at the major pairs. Now, the US dollar is the benchmark against all majors, so it will impact all pairs. So then we're looking for potential trading opportunities. We're looking for trend lines. If anything, you've got to really decipher what are good trend lines and what's not. This trend line here, for instance, I want to leave this one up and just give you an example. Right, we've got the first point up here at 119.40. This point next to it is pretty close. I'm almost ready to discount it. We've got the second level here coming in around 118.62. It's had 2 touches. Really, to have a confidence in a big trend line, you're looking for probably 3. So what I would do in this instance is I would probably get rid of that, because it's giving me a false entry. In saying that, you can see how it's had that little spike through the level. It looks like there's a few traders looking at it. But on the bigger picture, it is just trading sideways in a bigger range, almost up towards 119.20 and down here towards 117.50. This support trend line actually is probably almost too short term as well. But I'll leave it there for the moment just to give me some indication of what traders will be focusing on. So what we're looking for is entry levels, right? Charts. We've got the news. See if there's any shift in momentum. Tell us the answers to why the currency's moved in the previous session, right? This is what all these news services are doing. They are actually trying to tell traders, give them answers to why the euro moved, what's happening in the US dollar. If it did move, what was it on the back of? Was it the data, economic numbers, or was it geopolitical news? Was it something external? And once you understand those key components, then you're pretty much set to trade, right? You understand what's going on when you look at the charts, then you'll understand what each of these currencies is doing and what phase they're in. Long-term wise, you'll have a very clear understanding. If you set your charts up like this, and I've got them for all the major currency pairs, you will see very clearly in a short-term and long-term aspect at a glance what they are doing. And then you can make decisions. So now what we do, how do we bring this together? Where's the next opportunity? Well, as I said, it comes back down to the economic data releases. If there's no major economic data releases and there's not much coming out here in Europe over the next 24 hours, okay, what does that tell me? Well, it tells me a couple of things. Euro and sterling, right? I come back to those charts. I look at the technical levels. They have been range trading. There's no economic numbers to really change things. So I'm more inclined to start to think about strategies. Okay, I'm starting to think range trade. If there's no news to change the momentum of the currencies, well, they should stay within recent ranges. But if you have been trading for some time and you're aware of what's going on, you'll understand that sterling, okay, there's an ongoing Brexit issue or negotiations. And there are some Brexit talks coming up this weekend. So sterling is pretty much behaving around the Brexit issue. With regards to the other major currency pairs, they've been trading sideways, waiting for more clarity around the US tax bill. Now, this is a geopolitical event which is just haphazard, right? Geopolitical issues suck, right? They stop the currencies, the normal flow of currencies around the economic numbers, which the central banks, make their decisions around future interest rates. So it messes up, discombobulates the natural flow of the currencies, and that's a real bad thing for traders. So when you see a lot of geopolitical events, the more experience you get, the more disdain you'll have for them. And that's why everyone's really pissed off with Donald Trump, because he's just a walking, ticking geopolitical time bomb. He loves throwing in random events, and it throws the currencies around a bit. When there's no geopolitical events, trading is easier. It's easy to go in here with no economic releases in Europe, UK or Eurozone. I would be thinking very strongly about going in with range trading opportunities there. But because we've got the ongoing tax bill in the US about to come out at any time, and then also Brexit, you're probably sitting back and thinking, well, let's just wait for that easier trade. But so then you're trying to work out, right? There are some good technical levels here. The Aussie sort of grinding sideways, so is the Kiwi. Dollar yen's edging up. What can we look for to get a trade going here? Well, that's where it comes back down to these housing numbers, right? We get some really strong numbers here, okay? The US dollar will rally. So then you can come back and go, well, if the US dollar rallies, what's the best pairs to trade here? Well, we might get a trade down here in the Aussie down through 76.5. We may see dollar yen rally to the top side. Now it's a bit mid-range. Ideally, I'd be looking for it to break through that level, or if it was closer to support, I'd be happy to buy there. But you may have short-term trading opportunities around the data, right? One key aspect, and I could have almost sort of started with you're always factoring in. So your daily routine is looking at the charts, seeing where the currencies are, seeing where those important entry levels are. Okay, make sure you check the news to see why the currencies are exactly where they are. Okay, that's a massively important function of what you need to do. And this is one of the key aspects. I'll just sort of bring this in. So the market insight, understand what this is doing for you. I'm basically giving you an overview of what has happened yesterday, so you can quickly tune up, like why did the currencies move around and why didn't they? And it'll be to the point. Then once from there, I'm looking at the technical setup of the majors, so you can sort of see and isolate where the potential opportunities are. As you can see here, most of the majors are trading sideways. And then we'll sort of go through and isolate the currencies themselves. But what's the plan for today? Well, there's not a lot. We're waiting for the US Congress to pass that US tax bill. And the majors are sort of stalling on the back end of that. And then it comes back down to, again, looking at the economic data releases. This is the most important aspect. You go back through now, we know where the currencies are technically. Where's the next fundamental shift or driver going to come from? It's going to come from these economic data releases. And that's what you're looking for. Okay? And you connect the dots here. You connect the fundamental or the technical aspect here, the currencies with the best trend lines, and those currencies with fundamental drivers coming out, they are the major currencies in play for that day, right? Can you see how simple it is? When you know how and where the fundamentals and technicals fit in, you can all of a sudden see exactly what you need to do and when to do it. There's no need to waste 6 to 8 hours in front of the screens. You can actually come back now and sit back and focus on these opportunities and hit them very hard. All right, so you're looking at the key aspects and then you're ready to go. Okay, so that's one of the key things. So you'll have a bit more understanding around what we're providing you as far as information goes on the T4T side. All right, so you've got the news, you've got your economic data releases, you can see what's going on. Now, when you are ready to start developing your knowledge, you're becoming almost into that sort of pro level, all the ranges, right? If I come back to the technicals here, so when you look at the currencies on a daily or weekly perspective, these trends, right, Yeah, you can see them on your charts. Where do they come from? They come from the central banks. These guys, these 8 major central banks, control the sentiment of those currencies. Now, this is why, like a service like Reuters, now I've set this page up myself, but you can see very clearly what the interest rates are for each currency, the inflation levels. You can sort of almost compare them very quickly. If I need to go in and sort of check out a lot closer what's going on, I can actually go through and see what the top economic indicators were, whether they were stronger or weaker. And that should give you a very clear picture of whether that currency is going up, going down, or going sideways. Now, one of the issues, and this is probably the last 4 or 5, 6 years, all these central banks, okay, or most of them have had zero interest rates. The easiest component, the easiest trading is when these central banks are making decisions, either changing policy or doing something different. Now, a number of them haven't done anything different for years. The Aussie, in particular, the RBA, have been sitting put for a hell of a long time. We are starting to see the Eurozone, the UK, United States, in particular, raising interest rates. Canada also. Okay, so what have you seen when that happens? Awesome trading opportunities, because this is the backbone. The central banks tell you get long or get short or just trade sideways. All right, so this is one of the key aspects. And this is what traders at the banks will spend a lot of time on. And they will probably note down, whether it's the Fed, the ECB, the Bank of England, etc., what the sentiment is from those banks. And that's why when you do come back and look at the economic data releases and almost looking at the central bank or political events, these events themselves have a life of their own because, for instance, on the 21st, Mark Carney's speaking. Now, he's the governor of the Bank of England. Now, if he says something about interest rates or anything very important for that matter, the British pound will move very quickly. All right, so the whole aspect of bringing in the central banks, right, combining that with the economic numbers, that's your overall direction, right? You get central bank sentiment, combine that with the fundamental releases, and when those two match up, the currencies go for a big run. Now, we haven't had that for a while, and there's been a few geopolitical issues which have slowed things down. That's why I think it's very good that the US tax bill, it gets approved. It's the first major reform in 30 years. Now, is that dollar positive or not? I think it is, but only time will tell. Now, one thing that we want to do is through our Pro Trader course and also our Funded Trader program is get you trading successfully like the bankers, understanding the market, the simplicity of your technicals, understanding trade execution, but understanding most importantly where that currency direction comes from. Then all of a sudden, okay, you'll be trading just like the bankers. Now, I know for a lot of you, looking at a chart like this may seem quite naked, right? There's no huge amount of indicators all over it. You can't see what's going on. But you know what? Give it a try. This is where your trading will make a big difference. These trend lines, I was trained like this in 1990, as I said, at Citibank, and our team were the core group of graduates. When I was in Citibank London, the same thing, the exact same structure, the exact same trading. Citibank New York, the same. When I went back to Commonwealth Bank and ran the trading team there, once again, it was no surprise. The same training, the same technical trading is done at all the banks through all the levels, right? And that's why technical analysis works so well. So when you're trading at the various sessions, right, if you want to become a pro, and this is where the bankers are, they are pros, obviously, right? It's a career. They make it easy. So I've got a template here to make it easier for me to identify what's happening on the major currency pairs. I've got a specific template here to cover breaking news, commodities, news on the commodities, which are a major focus at the moment, particularly oil, and then just market news on what's going on in the Forex market. I've got my long-term technicals. Okay, I can see all the aspects of all the major currency pairs in a very short view. I can read what's going on very clearly. The US dollar, as I said, it's the benchmark. You need to really know what's going on with the dollar. So I've got a dollar page with US dollar economic indicators, US dollar news, and the dollar index, and the major currencies against the dollar. They're the most important pairs for me to look at if I'm thinking about trading the US dollar. The economic data releases. Every day you need to check out what's going on. Now, it doesn't mean you trade all these events, but what you do is you focus on them very closely and you isolate the best opportunities. Now, US existing home sales are high impacting data release. Is that good or not? Well, what you would do is you would factor in the major currency pairs, see what's going on with the dollar against the majors or even the dollar index itself. Funnily enough, we know there's a big geopolitical issue in the back end, so it may actually prevent that economic number from doing anything. This is where you combine your knowledge across all various aspects. Then, to specialize, right, what you want to do is specialize on each currency pair. If you're not trading all the major currencies, and probably having a look at the major crosses for that matter as well, you are isolating 90% of the trading opportunities. Right, so make sure you give yourself time to learn and understand all the major currencies. Okay, you can actually learn one of the key aspects of getting hold of a system like Reuters is understanding just the functionality. Once you understand the functionality, that's a breeze, and this is your best tool. And just by going through things, you can actually find good trades. Like there's a very good uptrend here in Aussie yen, which I haven't seen. Now I'm going to start to have a look at that once this webinar is over. So look at the Aussie. I've specialized here on the Kiwi. If there's something happening on the Kiwi, I can quickly focus on every aspect of the Kiwi, right? Same for the yen, even the yen crosses, right? Isolate the best trading opportunities, right? When the yen crosses go, they can deliver a huge windfall of cash. So make sure you are paying attention to what's going on, not only on just the majors, but also the major currency pairs, the major crosses. China. Okay, China is a player these days, and the news is very important for Australia and New Zealand, the two biggest exporters to China. Europe, okay, massive market in its own right. So I've got a European page here, which is covering euro, sterling, the Swiss, and euro Swiss. So I can actually, fine tune my trade decisions in that European session. But if I want to isolate euro, I can, and I've got specifically just euro and German information here to enable me to make decisions around economic data releases and what's going on in the major pairs in the euro itself. Same with sterling and also the Swiss. Now, all these major currencies, they have different nuances, okay? There's different things that impact them at different times. Like, for instance, dollar CAD is a great example, and I always overlay oil on the dollar CAD chart. Now, I've got oil inverted here on the left-hand column, right, because it correlates, because it's got a positive correlation with CAD, but because the pair is quoted as US dollar against the CAD, I've got to invert oil to get that natural visual with the correlation. So what I do is I just overlay it. I can see what's going on. Basically, oil is driving dollar CAD more often than not. Now, oil is rallying, okay? So it's in this chart, it looks like it's dropping, but that's actually because it's inverted. That should see dollar CAD probably potentially drop here. And this is one of the key things that you will learn and connect. If you get the foundation knowledge, right, going back to part 1 of this series, understanding capital management and the psychological edge that you need, right? Then go back into capital management, overlay your fundamental analysis and your technical analysis. Now you start combining all these components together. Then you can start to see where these trading opportunities are. And that's when you can start to combine things like oil, different commodities, different currency relationships, different correlations with different commodities for that matter. And now you can start to see very clearly where the best opportunities are. The central banks, well, this is something that you're going to learn more about all the time. And traders at the banks know this as well. We generally know how they work, when there's a change of policy, how strong that move is. But we always keep an open view that we can always learn more. Now, the central banks have been through a traumatic 8 or 9 years. They have done a huge amount of quantitative easing, which they've never done before. Now they're trying to unwind these things and starting to raise rates. This is a great opportunity to start to really fine-tune all your trading skills, because 2018, I think potentially we could see a lot of activity from a lot of central banks, and that's where the best trading opportunities will start from, right? The earlier you can identify the start of the trade, the better the trading opportunity overall. Technically, right, you can learn technical analysis in a very short period of time. It's about simplicity. Fundamentally, Okay, I've already covered the central banks, but isolating the high impacting, or the economic data releases, I should say, not just the high impacting ones, but isolating the economic data releases, it's just actual versus forecast. And the Pro Trader course will take you through that very clearly. So you can get a very good understanding. Understanding what function the news has. That's why you want an unbiased service like Reuters or Bloomberg, for that matter, that just tells you what's going on. They give you the answers why euro's higher, why the dollar's lower, why is sterling doing what it is, etc., etc. That's very good to form a view and opinion of where these currencies are. And as I said, trying to bring all this together can be a bit of a nuisance. And that's why, once again, we cover these things, right? Market insight, and most importantly, the daily analysis. So then you can come in, check your analysis against ours, right? If you jump on the 30-day free trial, you can get access to all the courses and all the analysis, everything. And then you can start to learn or retrain yourself to start reading the market like the bankers, right? The idea is to trade with the market, not against it, right? And this is the key aspect. You're looking to combine when the fundamental analysis matches the technical analysis. And we're not looking for sideways trading activity. I wouldn't do anything if it was just trading sideways. But say the fundamentals are all pointing up, the technicals are pointing up, well, the outlook would be up. And when we've got that scenario, we are looking for entry levels, and we are looking to put our capital into play. And that's what it's all about. That's when you combine everything together and you are trading and making money. If the fundamentals are working against the technicals, or they're not all aligned, well, then what you could be doing is trading against the market, right? Now, it doesn't necessarily you lose, but it's a less consistent method to trade. And that's when the bankers do sit back and they take their time and they just wait for the markets to line up. It's pretty simple. You wait for the markets to line up, you can start to make some big dollars and make some serious inroads into your trading. Okay, so that's the whole summary and the end of the 5-part series on how do bankers trade Forex. Now, one of the key components of the Forex teams is we used to line the traders up in a long sort of row across from each other. And what we used to do is chat all day. And that's one of the major reasons why we set up the 247 trade zone, to enable you to connect with like-minded traders, people who are, I would say, professional Forex traders. If you're looking to become a Forex trader, learn to trade with the market. Jump on our site, whether it's the free trial, jump in the 247 trade zone and start to connect the dots. It's all there in front of you. We're here to help. And what we want to do is we want to get you through the program and into the funded trader program to become one of our successful traders. Once again, if you have any questions, send us an email at info@tradersfortraders.com, or simply ask us a question once you're in the 247 trade zone. I hope you've enjoyed this 5-part series. I've enjoyed bringing it to you, and I look forward to working with you through 2018. All the very best. We'll see you again soon. Cheerio.